How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus Japanese yen. And as expected, price came down for the open of the month. And then going into today, Friday, NFP, NFP was today, very volatile day. Price came right back up. So looking at this, we can see we had a purge on Wednesday's low by Thursday's candle. And then we had a revert on Friday's candle back to Thursday's high. So purge down and revert. So purge on sell side here and then revert back to buy side here. So that's 3-bar pattern here. So we got a swing low formation. This swing low formation could be the swing low that leads this pair to continue trending higher for the rest of the month. Though we do have this hurdle in front of us, we have that PD array right here. We could potentially be seeing a lower swing high forming here and then price drops off. However, when we compare this to, let's say, the Japanese yen, let's say we're looking at the yen. Let's find that. So we're looking at the futures. We talked about this yesterday. We said that this could be a potential false break, and it was. We said that this swing high, so if you go back to yesterday's episode, we said that the Japanese yen futures may be making a move higher because it's breaking a swing high, which equals bullish momentum potentially. But if it fails to make a higher swing low, then it's just a false break. We can see it comes up, takes out the swing high. Does it create a higher swing low? No, it does not. So let's bring this back here. So after breaking that swing high there, do we get a higher swing low like this? We do not. Instead, you can see today on NFP, price comes down and trades right back down to sell side liquidity. So there was a purge on buy side and then the revert continuation back down to sell side liquidity. So price most likely is going to continue trending lower after causing retail traders to go long on yen. And then they went short. Commercials went short. Market makers went short. You can see the same thing is happening and occurring for the yen crosses. So let's just take a look at a few of those. So if we look at UJ, let's see what happened with UJ recently. You can say UJ recently took out a swing low formation, and immediately today on NFP, large candle, large range cycle kicks in, and it comes back and takes out a swing high. So it purges sell side liquidity here and reverts right back to buy side. You can also see it's happening within this PD array here. And that classic one I love to see, a swing high broken with a fair value gap. You can see that again right there. Price is running higher. So it's going back to buy side. It's most likely going to target these swing highs as well. So this swing high here, this swing high here, these are all relatively equal highs, looking for price to push higher. You can see it's still pushing. It still hasn't made the high of the day yet. And it might just close very close to its high today for UJ. And the same can be said for AJ. AJ fell off from its high, but if this market is going to continue to trend higher, I would suspect in the next coming days, the next couple of days, we'll see bullish price action come into play. I would rather see price print a down candle in the near future, whether that's on a Tuesday, Wednesday, or Thursday, and then buy after that candle and try to see price seek higher prices because we've already ran into that 60-day low here. We also are below February's opening price. We also dropped below the yearly opening price. So it dropped below on this candle here. It dropped below the yearly open. So that could be another opportunity where market makers are loading longs again for price action to continue trending up higher for the rest of the year if yen is going to depreciate for 2024 and all the other fiat currencies are going to outpace Japanese yen. That would mean 2024 overall should most likely be bullish, or there should be strong bullish months for yen crosses. If we take a look at some other yen crosses here, British pound versus Japanese yen, the same thing again. Was this a false break? Yes, we could say that. Why was this a false break? Because we can see it takes out a swing low and then price returns right back to a swing high, resetting that trend formula. Breaking a swing high is bullish momentum. Once again, purging sell side, reverting back to buy side liquidity above a swing high. We have these clean highs as well that we can see price potentially draw to. We're also creating a swing formation again. You have that purge on that previous candle here, and then revert on today's candle to that high. So that swing formation is a purge and revert in itself. It's taking out sell side on this day, and then this day is taking out buy side. It leaves the sell side liquidity open here. It doesn't want to raid this because this is where most likely the commercials are heavily net long. They're increasing their net longs in these swing positions to go higher. Let's take a look at another yen cross, euro, euro versus Japanese yen. Same idea. It ran a swing low in recent time, even here as well, and it's probably looking to push back up to some type of swing high formation, buy side liquidity. We got New Zealand dollar versus Japanese yen. We can see it ran multiple swing lows as well. You can see it ran this one too. So this could be an opportunity where commercials are looking to go long and they got retail traders trapped to go short. CAD taking off today as well. You can see how it took out a swing low. Could this have been a false break? Yes. And why is this a false break in confirmation? Because it returns back to a swing high. So we definitely have confirmed, or we have more conviction or confidence that this is a false break. Because if it's going to continue going lower, like I said before, if it's going to continue going lower after breaking that there, it should try to print a lower swing high to continue trending lower. But instead, it doesn't do that. Today, it runs a swing high. So it switches back to bullish momentum. And we still have relatively equal highs here that could be rated by the market makers. And then last but not least, I know there's other yen crosses as well. We're just going to go through the ones I have on my watch list. We have multiple swing lows here, swing low, rated. Price takes it out and then pushes right back up. Right back up. So it's purging and then reverting. It's trying to get back to buy side liquidity. It just got to this swing high. So right here, that's a swing high formation. 1, 2, 3. Price gets back up to it. So it's looking to push high. But you can see how they do liquidate here, taking profits after breaking a high. It is ideal to sell after breaking a high. So that's a little tip or ideas, for scalpers or short-term traders, that could be an idea as well. Price gets to it high, you can probably find a sell opportunity. And most likely the high of the day is going to come in by either London close or New York open. And then price sells off from there. And then the low might have been London session or even Asian, and price pushed up. But all in all, for AJ, let's focus back up. AJ, I will be more on the side of price looking to push higher, and this was just simply a false break of that low. So that low here, and even this low down here, those are false breaks. Price is probably trying to get back up to that swing high up here. How would we get there? And how would we try to enter this trend? Just wait for a down day and then look to see if price goes higher. We do have some news events coming up. So we got balance of trade. And then we also have a rate decision. So this is going to be very influential to the fiat currency, especially towards Australian dollar. So pay attention to what they do with the rates. Odds are they keep it the same. Who knows if they increase it or if they decrease it, but we'll see how that plays out. We're not trying to predict what they're going to do. Let the news come out and then readjust and align ourselves to what the data is saying about rates. Because I believe in my methodology, interest rates is the primary driver to fiat currency. The rates bring in the investors, or the rates exclude the investors. So if the rates aren't high enough, investors don't want the currency. If the rates are high enough, investors want the currency. They're more likely to come into that currency versus leaving it. Nobody wants Japanese yen because, like we said before, its rate is weak. It's negative. Hopefully you found this insightful. Peace.